All right, let's get right into it. The crypto market today, March 14th, 2026, is sending some seriously mixed signals. I mean, on the one hand, prices are looking up, but just under the surface, there's this hidden battle brewing. So we're going to dive in and unpack what is really going on.
So if you just glance at the numbers, you'd think everything's great. Major coins are in the green. But at the same time, we've got all this geopolitical tension and the traditional markets are in turmoil. It's creating a whole lot of noise. So the real question is, what is actually driving crypto right now?
And here's a snapshot of exactly what we're talking about. You can see Bitcoin is pushing past $71,000, Ethereum's over 2,100. But, we're seeing headlines that stocks are getting hammered by rising oil prices and global instability. So, how is crypto just shrugging all of this off?
To really get this, you have to look a little deeper. The market isn't just one thing right now. It's a battleground. The entire crypto space is caught in this massive tug of war between two totally opposite forces. And today, we're going to break down both sides of that fight. See, on one side, you have the story of internal technical problems that are threatening one of crypto's biggest players from the inside out. And on the other side, you've got this completely different story of external integration, where another giant is busy building bridges right into the heart of traditional finance. These two stories are pulling the market in completely opposite directions.
So, first up, let's talk about the force that's pulling things down, the bear case. This story centers on Ethereum, where a recent, totally well-intentioned upgrade has, well, it's backfired, creating some really disastrous, unintended consequences for the whole network. Okay, so back in December 2025, the Fazaka upgrade went live. And the promise was simple, right? Make Ethereum faster, cut down transaction costs, and just make the network way more efficient for everybody. Sounds great.
But what actually happened was kind of shocking. The developers thought, okay, this will probably reduce fees by maybe 10 to 30%. Instead, fees completely collapsed by over 90%. Now, cheap fees sound good, I get it, but this huge miscalculation created a massive, dangerous new opening for scammers.
And this is the vulnerability it opened up, something called address poisoning. Here's how it works. A scammer sends you a totally worthless transaction, just a tiny bit of dust, from a wallet they created to look almost exactly like one you use all the time. It has the same first few and last few characters. The whole point is to get that fake address into your transaction history.
So why would they do that? Because the next time you go to send some crypto, you might just quickly copy what you think is the right address from your history, but you've actually copied the scammers. And because fees are now practically zero, attackers can spam millions of wallets like this for just pennies. And they only need a tiny number of people to make that mistake to turn a huge profit.
And this chart, wow, it just lays it all out. Before the Fusaka upgrade, these scam transactions were less than 10% of all activity. By February of this year, more than 1 out of every 5 transactions on the entire Ethereum network was one of these poisoning attempts. The upgrade didn't just open the door for the scam, it basically rolled out the red carpet.
But the damage doesn't even stop there. This collapse in fees directly hits the incentive to actually secure the network. Right now, the annual yield for staking your ETH, for helping to run the blockchain, is down to a pretty meager 2.7%. Now, just to put that in perspective, right now, you can get a 4.1% yield from US Treasuries, which are basically considered one of the safest investments on the entire planet. So when the risk-free rate in the old-school finance world pays you way more than securing the world's second-largest blockchain, that signals a really serious problem with the network's whole economic model. Okay, now for the other side of this tug-of-war. While Ethereum is wrestling with all these internal demons, Ripple is playing a completely different game. They're not just focused on perfecting their own code, they're out there building bridges to the financial system that already exists. And man, this quote just nails their ambition perfectly. They aren't trying to build just another crypto project. They're building a new set of rails for global finance. They're aiming to be a direct competitor to the SWIFT network that banks have been using for decades. And listen, this isn't just talk. This is a strategy built on real, concrete wins. They're getting regulated. A 100-year-old French bank is listing XRP under Europe's toughest rules. They're going global, getting a license that unlocks the whole Asia-Pacific corridor. And they're partnering with huge names like MasterCard and, this one is a big deal, the DTCC. That's the company that clears every single US stock trade, and they're planning to use the XRP ledger for tokenization this year. And you know what? This strategy is having a massive effect. In just the last 30 days, the volume of real-world asset transfers on the XRP ledger has absolutely exploded by over 1,200%. Let's be really clear here. This is not retail speculation. This is a massive signal that those institutional on-ramps Ripple has been building for years are finally starting to see some serious traffic. So what happens when you put these two totally different stories together? You get a snapshot of an entire industry going through this chaotic but pretty fascinating transition. It's really a fight between crypto-native tech and the massive forces of traditional finance. I mean, just look at these headlines all from the last couple of weeks. You've got BlackRock betting on Ethereum's future with a new staked ETF. At the exact same time, the SEC is getting behind tokenized securities. That's a huge win for Ripple's vision. And then, out of nowhere, the US Senate votes to ban a CBDC. It's chaos, for sure, but it feels like the chaos of creation. And all of this brings us right back to the market today. It lets us see what's happening with a totally new understanding. That confusion we're all feeling, it's actually a reflection of this much deeper conflict. So let's look at this chart one more time. That green you see for Ethereum, that's happening despite its deep technical and economic problems, probably held up by big names like BlackRock getting in. And that surge for XRP, that's being driven by a methodical, external push into the legacy financial world. See, the market isn't confused, it's conflicted. So here's the breakdown side by side. You've got Ethereum facing a crisis of internal flaws and a weakening economic model, all born from the unintended consequences of its own code. And then you have Ripple executing a strategy of external partnerships and deliberate regulatory moves, which could actually shrink its supply as big institutions lock it up for liquidity. And this really brings us to the key takeaway. The bottom line is this: the tension is the story. If you want to understand crypto today, you have to look beyond the price charts. You have to look at the deeper narratives that are battling for the future. You've got one side fighting to perfect its own self-contained world, while the other side is fighting for a seat at the existing global table. And that leaves us with the ultimate question for 2026 and really for the years to come. Will the winners in this space be the projects with the most elegant code, the best tech? Or will victory go to the ones who build the strongest connections to the world that already exists? The answer is still being written. Thanks for joining me.